United States-US economy rebounds in Q2 2025, but growth may be misleading. July 30th, 2025, Washington, D.C. The U.S. economy returned to growth in the second quarter of 2025, posting a 3% annualized gain after a contraction of -0.5% in Q1, the first such drop in 3 years. What drove the growth? The surge was largely driven by falling imports, spurred by sweeping trade policies, which artificially boosted GDP by shrinking the trade deficit, a key arithmetic component in the formula. Consumer spending rose, accelerating from 0.5% in Q1 to 1.4% in Q2, but still remains modest compared to historical trends. Real final sales to private domestic purchases, reflecting real underlying demand, grew at just 1.2%, the slowest pace since late 2022. Expert warnings and outlook. Analysts caution that tariffs and trade distortions have skewed the headline GDP figure, masking a weakening core economy. Freya Beamish of T.S. Lombard remarked, "An economy that was purring along has been placed on hold." And Raymond James noted the slowdown in domestic demand remains concerning. The Federal Reserve held interest rates steady in the 4.25% to 4.50% range, resisting political pressure to cut borrowing costs amidst mixed economic signals. President Trump praised the GDP figures, calling it way better than expected, and urged rate cuts, though economists remain skeptical about sustained momentum without stronger private sector investment. Global growth forecasts adjusted. The IMF raised its U.S. GDP forecast to 1.9% for 2025, citing easing trade tensions and tax incentives boosting business confidence. However, uncertainty around tariffs and protectionist policies continues to constrain growth and fuel inflation concerns. Quick summary. Metric value. Q2 GDP growth plus 3.0% annualized. Q1 GDP growth minus 0.5%. Final sales to private domestic buyers plus 1.2%. Consumer spending growth plus 1.4%. Full year 2025 GDP forecast, IMF, plus 1.9%. Final take. While headline GDP data suggests a healthy rebound in Q2, a closer look reveals uneven fundamentals. Trade shifts, not core strength, drove much of the recovery, and domestic demand remains tepid. As the Fed awaits more data, economists warn that without renewed investment and consumer confidence, growth could slow significantly in the second half of the year.